Greetings, Dr. Jeffrey Scott here, and this is my Market MRI Pro update for Monday, December 1st, 2025. As I do my nightly review, I have to ask myself the question, was Monday's market action worse than the indices suggest? Again, my name is Jeffrey Scott, marketmripro@gmail.com. My Google group's called Top Down Trader, my website, marketmripro.com. This is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. I do these videos to demonstrate my tools for top-down analysis. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. And I have tools in multiple platforms, but am an independent trader. I have a Google group. It's called Top Down Trader. I welcome you to it. Join. It's free. It's where I post videos when they don't go to YouTube. It's where I talk about the markets, where I do invites to free educational programs. And you can always quit if you don't like it because you control your membership, not me. Like to look at the leaders list and still above the 50. So I'm going to leave it alone. But today was a definitely a down session. And you can see the red candle here. So a pretty significant bad day, and as you could see on the leaders with a lot of volume. We're going to talk about that volume in a minute. From a know your news and earnings dates, Powell spoke this evening or will speak this evening. So I think everybody's going to be listening to hear what he has to say about rates and the economy and the missing data. Um, we've got Bowman speaking tomorrow and some auto sales. And then Wednesday, we've got a lot of information, the ADP, and then some old backdated um, import prices and other data. I think we're in an interesting period in the market. I'm not sure what spooked the market today. Perhaps it was the Bank of Japan talking about intervention, and we're starting to hear murmurs in other places as well of is the next move going to be higher, certainly in Japan on rates? What's the BOE going to do? Um, and I think the rate cut is probably priced in here. And whenever there's a discussion that questions it, the market sells off. And when somebody reaffirms it, the market goes up. So we'll see because December 10th is when the Fed meets. If we look at earnings after hours, we had some big movers. And I'm looking at this right after 7 o'clock, and CRDO came out and just destroyed its numbers, destroyed to the upside, being a positive comment. It's up 18%. MDB, the same thing, up 17.8%. And JANX, which I don't own, demonstrated why you have to be careful with biotech, as they had data come out today, and it's down 41%. As it says in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. We got some big software names still to come this week. CrowdStrike tomorrow afternoon is one that I'll be watching. OKTA, as well as Salesforce, Snowflake, and more. Thanks again to those who joined me this weekend where I launched a new product and had a special on Market MRI Pro. I'm going to continue since today was Cyber Monday. I decided to leave that link working. So if folks have an interest in Market MRI Pro at the sale price of $14.95, I will keep that going until Friday midnight. And if you're interested, you just have to email me at marketmripro@gmail.com. Already did that event, and there is my email address. Those that have the program, a lot of new updates and improvements. But if you have any challenges, coding at marketmripro.com will get you to Praveen and support. All right, let's go look at the market. So here is the, let's rank this by 1-day close. I thought I did that already. It's best fit. Here are the results for Monday. You can see Bitcoin continues to crash down another 5.92, wiping out the several days of improvement that it had last week. If you look at the US indices, the Russell was down the most at 1.26, the Diamond's down 0.81, and these two are at the bottom of the range. The Spider is down 0.46, down 0.34 for the Qs, 0.12 for volatility, interestingly. Thank you. And the dollar was down 0.04. If we look at the new highs and new lows, we still don't have many new lows. And what you could see is that we're still positive on new highs minus new lows at 52 weeks on both the NYSE and the NASDAQ. What I didn't like was when you look at the colored versus the gray, the number of sectors positive in the S&P 1500, NASDAQ, NYSE, the number of positive industries both came down hard. And when you look at the percentage of stocks, 36% were up, 30% were up, and 34% were up. That's not a good day. And even though the indices, except for the Russell, were not down 1%, that is a negative looking day. If you look at the percent change on the day, the leader was energy in the S&P 500 sectors, and then discretionary tech were just up a teeny bit. And the lead to the downside is utilities and healthcare was down. Biotech was down hard today after no surprise if you look at the candle that we saw on Friday. If you look at what themes were working today, well, again, marijuana, I spend so little time worrying about it because they're cheap stocks. You got China internet was up, copper, oil exploration, silver, retail, interestingly, um, FTSE Southeast Asia ETF, more China, but really nothing's up a lot. And if we look to the dark side, you could see that clean tech got hammered 3%, blockchain 3%, aerospace 2.86, and biotech 2.66, and solar 2.6. So a lot of the recent leaders got clobbered. Is this just one day of profit taking? Is this the institutions resetting their portfolios now that their window dressing is over, trying to find where the next movers are going to come from and cutting back on their winners? It may be, but one thing has me nervous. And what has me nervous was volume was really big today, up 69% on the NASDAQ, up 75% on the NYSE. Not a lot of stock movement and really big volume, a churning day. I just wonder if that's a topping sign. It may just be the people back for the weekend, but I'm a little bit nervous. If I look at the timing brief, you could see topping tails on the daily pulled into the moving average, which, excuse me, the trend line, which I used as a sign to get in. So is this going to be a failed breakout? And, when something doesn't behave and it gives you an expectation breaker, like a failed breakout, look out below. Something to watch. Similar candle with a bit of a topping tail on the Qs. Um, Total shooting star on the Russell, and then a similar, almost a shooting star on the Diamonds. So all those look kind of ugly. Now, have they broken down? No. Have they changed their bongos? No. Have they turned to a sell signal? No. So am I making a big deal about nothing? Maybe. But I'm a little bit nervous. We'll see what happens in the markets on Tuesday. Obviously, with MDB and with CRDO doing so well, you'd expect tech and the AI complex to be positive, and maybe that rescues it. But I'm nervous. If we look at the weekly, has anything changed? No. It was a great week last week. It's an inside bar. Um, I'm not ready to call an end to this bull market, but I'm a little nervous when I see that volume. If we go and we look at the index ETFs, again, the volume could just be people coming back because the volume last week was horribly light. So we're kind of closed. So just by my convention, an open box means the close is higher than the open. The fact that it's red, it means that we were down. So we're down 0.5%, but we closed above the trend line. And that's the important piece on the spider. And you look at, we had pulled down to the 100-day moving average, took out the trend line. Let's see if that holds. If it doesn't hold, then I think I'll be a little bit concerned and wonder if a short-term top might be in. Now, seasonality is supposed to be our friend here, but that's never a guarantee. Qs, similar pattern, has not broken the trend line. And again, if I want to be bullish, it's still above the 17 and the 50, and nothing has broken. Volume was high. If we look at the diamonds, similar story with a little bit of a topping tail, still above the 17, nothing has changed. So still watching. So I'm not giving up the bullish enthusiasm in total. I'm just raising an element of concern, which usually means I raised cash and took some profits. Um, Major move, you expect to come a pullback. I don't like that candle. We traded higher, failed and traded, closed below where we open, or actually it's kind of closed at where we're open, and a down session by the Russell. And you can see higher volume than we've seen. So all things look the same. We've had a bit of a pullback on higher volume, but haven't broken the pattern. So worth watching, not worth, in my mind, throwing out the babies with the bathwater yet. If we look at volatility, you could see here a solid candle, which means, yes, it closed lower than it opened, but it was up 5.44%, and this is still the daily. So move off the bottom. So volatility is still in play as we move today to more of a risk-off phenomenon. And the dollar, again, closed higher than it opened because it's open, but it's a red candle, so we know it was down a little bit, down 0.04. So again, the U.S. markets, hopefully they'll be resilient, and maybe this is a one-day fake out. You could see gold was up 0.45. Silver was up a lot. Silver is in just a massive breakout here, up near 2.58 after being up 3.71 on Friday. Oil is making a play. Now it's going right into a lot of area of resistance. We've got some trend lines. We got 50 and a 200-day moving average. It was the leading, or energy was the leading group today. Natural gas looks like it wants to break out. And you could see the 10-year was up 0.5% or 0.43, and the 30-year was up 1.69. So if you don't like bull markets, then maybe you like the fact that the rates are going higher. That's a concern. Things like home builders, which have been rallying, were rallying on the promise of rate cuts and lower rates. So this could certainly put a dent in them. So I think the market's a little bit enough to make me be keenly aware of what happens. If we look at the buckets, you don't expect any signal here because we didn't have any big moves today. And the buckets will load, and you could see not many above, not many below, no signal. If we look at market breadth, there's nothing down here, so no Hindenburg Omen or other signals today. And you could see the NYSE, and I talked about would we have an issue up here, and you could actually draw a bit of a megaphone. And boy, if it comes down to test the bottom of the megaphone, it's got a long ways to run. That's a reversal candle, still above the 50. Have not seen any big breakdown in the number of stocks above the moving averages. The NASDAQ also above the 50. This one at least closed higher than it opened with the open candle. And you could see new high, new lows were positive, but AD lines and up-down volume were negative on both. If I move to the other market breadth, and did we have a clue that we'd have a weak day today? Yeah, we did. And I talked about last week and again over the weekend, when you get to 0.96, and we were at that area yesterday, um, you have a tendency to see this thing roll over. So this is the 13-week new high, new low. It got to an extreme. The market pulled back. Well, we're at 0.81, 0.86, 0.54, and 0.80. We're no longer at an extreme, so that's good. We're not an extreme to the downside that says it's got to go higher, but at least we've taken some of the froth off. That might be a bullish thing. Maybe we continue to rotate and go sideways for a bit. If we look at the ratio charts, you can see the strength in energy. I did a video series last night for the new release in Metastock, and I highlighted a lot of the energy stocks looked interesting. Healthcare, as I said, came down today. Tech started to lean back higher. If we go into the JAS layout, we can start to look at a formal top-down analysis using 3,750 stocks, and we could see that in the broader market, different than the S&P 500, there was not any positive sector. The leading sectors were cyclical, defensive, and energy. So we'll look at those three. If we take the industry groups in those three, there are some that were positive. So let's take a look at that. Oil, gas drilling, apparel, department stores, gas refiners, which we saw a lot of last night, beverages, furnishings, gas equipment, apparel manufacturers, beverages, and home improvement. There's 10. That gives me 139 stocks. If I come in here and I filter at $5 and 500,000 shares, it leaves me with 76 stocks. If I rank them by number up impulses, which you don't expect a lot today in a bad day, we can start running through the list. GIL, Gildan Activewear. I wonder if it had earnings today with a massive volume. Nope, earnings were 1029, and you had a positive surprise on earnings and revenue. That doesn't explain today. Let's look at news. I guess people were happy that they completed the acquisition of Hanes Brands. All right. Probably not a reason for me to buy it, but look at the momentum, breakout, volume, gap, a CPR change or in an EMS change, massive volume. It's worth watching. Leg, this there was a buyout offer or take private offer today. I don't chase these. PS, Tenaris Group's deal, breakout pullback, looks like it's ready to run. Kind of looks like the Russell with a close at the bottom of the range. TAP, well, if market goes down, we drink a lot of beer. Sleep numbers, sleep a lot. And maybe of all of these, this one looks the best to me. The refiners and marketers, which is where PSX is, and I think it also is one that looks interesting. I think they have MLP as well. Let's see what they do. Highlight that. Midstream, chemicals, refining, and marketing. So I was pretty much on target there. Pays almost a 4% dividend. Great earnings per share growth. Look at the earnings per share growth, higher than the multiple. I like that. I think so far I like PSX. Earnings are out, not to January 30th. And I would typically go through FIGS, which I thought that was healthcare clothes, healthcare apparel. I'd have to, was there news on it today? Strong momentum stock to buy now. So that's an interesting story. If you wanted to read it, you just have to click on it. It'll pull it up and you could read it to your heart's content. We include news and earnings in the program because I think they're necessary pieces to make a decision. COLM, Columbia Sportswear, Whirlpool, WHR. Another one that looks good, and I think this is the place that I'd be interested in, is in the, again, the MLP and refining and marketing space. Valero pays a dividend of 3.51. Look at the earnings per share growth this past quarter with a big surprise. I mean, so far, the place to be looks to be in energy. VAL, which is special, is this chemicals or is this the airline? Offshore oil drilling. All right. Schlumberger, the grandfather of oil services. Eventually, this thing's going to come back. Is this the time? Steve Madden Shoes. What a run. I always wondered if the stuff that was in Wolf of Wall Street with Steve Madden were true or not. Didn't make him out to be the smartest person. Yeah, multiple 23, growth rates negative. That's my only concern. They're projecting a 45 cents earnings in February compared to 55 cents. I like the pattern. I don't like that. SDRL, another energy play. RES, another energy play. So I'm thinking from the top down perspective, what has me interested is most likely going to be PSX and even more VLO. So that's my top down analysis. I identified the top sectors. Then I chose the top industries and the top sectors, drilled down and found a couple of good looking stocks. We all have the I can't help myself, which is the bottoms up approach. Now, I am not thinking buy with the market that we saw today. I think there is a chance that we'll see a jump tomorrow. Um, Not that the futures are telling me that much right now, but those AI related tech earnings were pretty darn impressive. But it all depends on what Powell says in a little bit tonight. And right now, futures are mixed at best. Let's look at two scans. So let's clear the existing scans. Let's look at the A plus. This is my double momentum. And nobody made the list today. Let me just do that. Make sure there's nothing hiding there that it didn't pick up. And then let's take a look at the single A, which is pullbacks and uptrends. And we have Fox, so entertainment. So a little pullback in an uptrend. Fox A, its brother. But here we go again, PSX. So I think if I'm going to look at something tomorrow, and a lot depends on what the open looks like and how the market's behaving and whether today's sell-off continues, I might look at energy and I might look at PSX. So what do I think happens? I am a little bit concerned. It would not shock me to see the market pull back a bit here. We did get short-term extended, but that short-term extension actually has worked itself off. So cautiously optimistic that we go higher ultimately. We're in a strong seasonality month, but do we have another couple of days of weakness first? We might. Have a great day. And remember the Black Friday special. I'm going to keep through the end of this coming Friday, so it'll be for a complete week. And it's $14.95, including the data. Huh, I always forget I have to shut that window before I try and cover it up. But $14.95 for the year, including the data. And love to have you join the Market MRI Pro family. And you know what? I thought I just turned that off. So let me do that again. And let's go here. Perfect. Market MRI Pro at gmail.com, $14.95. Let me know if you're interested. Thanks, everybody.